In this video, traders, we're going to explore a question from a subscriber. How do you increase your hit rate? Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. All right, so how do you increase your hit rate? Message or question, should I say, from a subscriber. Appreciate all your questions and comments. As always, guys, thank you very much. But this is a great question. It's like, how do I increase my hit rate? Now listen, we know that we either want to increase our hit rate, and it doesn't necessarily mean, we want to increase our hit rate or want to increase the risk-reward ratio. And it doesn't necessarily mean that we're going to make more money, but some people just like to have a higher hit rate. It might be a personal thing. You're like, oh, I don't like, losing consistently. I prefer to win more. Maybe if that doesn't even affect my bottom line so much, it makes me feel better about it. And so this isn't a golden or silver bullet to kind of say, hey, if I increase my hit rate, it's going to increase my profitability. It's a different thing you're trying to look at here. Now, it can do if you do some other tweaks as well, but it is normally more of a, prefer to have a higher hit rate. So for example, low hit rate strategy, if we were talking not just directional plays, low hit rate strategy would be buying well out of the money put options, for example. So looking for catastrophe plays. You'd lose, in fact, there's a hedge fund, I believe, called the Black Swan Fund, where you'd lose consistently, little bit. But then when you win, you'd win massively and you win more than you lost, and you'd win, cover that and make some more money. So that would be a really low hit rate because you'd expect that to be the case. You're not going to get these Black Swan events regularly. A high hit rate, if we're talking about that kind of thing, would be to be, selling well out of the money call or put options. So being the other side of that trade. So literally, selling that insurance, collecting win. Ever so often you lose and it would wipe out your gains, and hopefully you'd be slightly better off. But that's extremes. But let's talk about kind of the stuff that we're into, which is more, or most of us are into, which is more those directional plays on the currency markets or the indices. So some things here, guys, the easiest one to do is to widen your stops. If you purely want to increase your hit rate, and get your hit rate being the number of trades that are profitable, the percentage of profitable trades, widen your stops. Now, that means you might have to sit through heat. That also means that you might have to take a big loss. But think about it. If you widened your stop, let's say you had no stop, right? You had no stop completely. How many trades would eventually maybe come back in your favor? Probably quite a lot. But it doesn't mean it's a great strategy, because it might be the one that never comes back and just goes on and just clears out your account. So that's not really feasible. But widening them still, many people have their stops a little bit too tight and they're getting stopped. Now, again, irritate the point, doesn't necessarily mean we're going to have a better success rate from it, but just if you want that hit rate, a wider stop keeps you in the trade longer. It's less likely to be hit. If it's less likely to be hit, you've got more chance of the trade being profitable. Another way of doing it, which is not one that I recommend at all, is to scale into positions with a martingale type strategy. And that is how a lot of the social kind of, what they call them, the brokers that you can follow, a social following platform type thing, operate. There some of the ones on there, that's unfair. I'm not painting them all the same brush, because there's some good guys on there and some great traders. But some of them will add to the position to make the hit rate look good, and they display like a 98% hit rate, and everyone goes, wow, that's amazing. But in actual fact, all they're doing is they're adding one, doubling, martingaling, and all, just adding. And then as the market kind of rotates back, they're scaling it out and able to get this high hit rate. And they've probably got a lot of unrealized losses on the books. So that's just some. Again, it's not all of these social copying, because there's some great people out there, but that's just some of them. And that's how they get the high hit rate. They're adding. But of course, that doesn't mean you're going to make money, because it just takes one of them to just completely rip through the floor and you're long and you're wiped out. So not really feasible. But wider stops is, you can play around with that a little bit. Second one is to have stricter filters. So your filters saying, okay, well, I'm going to take this trade under these conditions, whatever that may be. Really, what we're trying to do here is we're trying to have a set of variables that we adjust to say we want to take the trade. So in a simple format, imagine that we had one of the most profitable strategies out there that I think is if you have a kind of catalyst, a news-based catalyst, that reprices the market then pauses and flags at highs, and very, very often you're going to get continuation. Right, that's a super high hit rate strategy, works really, really well, but of course it doesn't happen very often. You don't have enough of a catalyst regularly for it to become something that you can trade all the time, and you have to be there, and there's loads of different variables with this that make it challenging and make it, you probably have to have other strategies to go with it. However, that kind of thing, if you just traded that, you would have a high hit rate, because your high hit rate, it's such a high probability of it doing that continuation. And so whatever your strategy may be, you just become a little bit more strict with your filters. You don't end up chasing stuff. The market has to come exactly to you. Market conditions have to be exactly right. But you know yourself on your strategies that you trade, how you could really dial in those filters to make it very, very strict, so that only really executes when the high probability trade is setting up, and that's one for you to decide. The final thing is to just trade a different strategy. Many strategies out there are low hit rate, but they work really, really well and have a good high risk reward ratio. One could be buying a flush, right? Buying a flush. Now, and also this depends. It does depend, because buying a flush, I'd say, is a high probability trade for a pop back up. So in other words, we talked about this, come down intraday, bang, big flush, big candle, etc., pops back up. That itself is quite a high probability trade. You get a high hit win rate from that if you're good at spotting the turning point with a price action skill set. However, the chance of that turning and doing a full reversal, yeah, they're okay. They sometimes happen, but very often you get the flush and a revisit and it doesn't happen. But that would be probably a low hit rate, high risk reward trade, because your risk is pretty low because you've brought down here, and really decent kind of 20x, 30x on your trade type thing, especially if you hold it for a couple of days. So that wouldn't be the strategy you do, because you're not going to get it very often. So changing a strategy to something that has got a bit of a high hit rate, like a momentum type plays, like some of those kind of things that, yeah, they're okay, the flag type ones that we just talked about, then that's definitely something I talk about a lot, trade and the intricacies of that. You might not get a massive risk reward ratio on it, you might not get it going 10x, but the probability of it at least kind of breaking through the highs and giving you something super high. So just adjusting, you have to use that by any means at all, guys. You can use your own strategy, but you'll probably have an idea which strategies are effective, which strategies work very, very well. They don't give a lot, but they give a scalp, and so you can adjust to align yourself with that. But just be careful that we don't go down the rabbit hole of trying to get a high hit rate and at the sacrifice of P&L, because ultimately, if you can condition yourself to sit through a few losers and not have so many winners, but when you make a winner you're running it, then that's going to be so much better for your P&L in the end. But of course, if you want to have a high hit rate, a little separate strategy that just chugs along, sitting there, knocking them out of the park, a little high 80% scalping strategy, then that's fine. But you just accept it for what it is. It's like a grab type setup strategy that sits there, and you have the other strategies that sit there, and it sits in the whole sphere of your trading. Anyway, I appreciate the question, guys. Comments in the comments section below. Let me know your thoughts on that. How would you increase your hit rate? Take care. Bye bye.